How's that video I sent you of me? You were
Adam,
quite
please,
disgusted by it.
please, TMI. Next time, don't show me that video. As probably a lot of people know, I vote Liberals just about every election. Anyone can hop onto realestate.com and pull up a list of houses, right? Hell, my dog could probably do it on my iPad and find a few properties himself. I want to talk about Labor winning and what that means for property investors, what that means for the economy, and what that means. Now Trump's in, and Trump's caused a lot of chaos. Whether you love him or not, the guy's caused a lot of chaos. One thing Labor loves doing is spending money on infrastructure. And they ain't going to stop. We've got a lot of infrastructure. We're spending more money on infrastructure over the next couple of years than we have in the history of Australia. All their policies are geared around pushing property prices up, which is bad for renters, bad for the Aussie battlers, but good for property investors. The most expensive words in property investing is let's wait and see. The RBA are looking at dropping rates 3 or 4 times this year, and you want to get in before the next rate drop. Okay, guys, me and my team are about to go live, so make sure you grab your beverage of choice, sit down, and you're in for an amazing show. Okay, hello and welcome, Adam.
Hello, George, and everybody else.
Adam, I just want to say I really appreciate you. I know you've been feeling really sick and you made the effort to come, so thank you so much.
Have to be here for the team.
Absolutely.
I'm here. How's that video I sent you of me? You were
Adam,
quite
please,
disgusted by it.
please, TMI. Next time, don't show me that video. Next time I'm sick, I'm going to send you a video, teach you a lesson. Now, listen, we're going to be talking about the election and election fallout, because what I want to do is, what I want to talk about today is we're going to be talking about 3 things. One, we're going to be talking about the election fallout, Labor won. Let's talk about what that means, because a lot of people have reached out to me and a lot of people are worried. And they said, George, what are we going to do? Do we sell everything or do we change our strategy? And I'm going to explain to you who the winners and losers are from the election. And you're going to be surprised, actually, because as probably a lot of people know, I vote Liberals just about every election. And, I was disappointed, but there's also a silver lining with the Labor election, which I want to talk to everyone about. Then after that, we're going to be talking a little about rental returns and how they work. And then what we've got Zach coming in, who's going to go into our private group and talk a little bit about, how do you actually pick a property? Because a lot of people, they go online and look around realestate.com, right? But what I want to say is, look, anyone can hop onto realestate.com and pull up a list of houses, right? Hell, my dog could probably do it on my iPad and find a few properties himself, right? But there's more to it than that when you're looking for a property, right? And there's always people reaching out to me going, hey, I found this and I found that. And the thing is, instead of going to the Tinder of property, which is realestate.com, and sometimes the pictures and the description is not exactly what you're getting when it comes to realestate.com and Tinder. And that's why I want to talk about that later on to sort of help people. Right, there you go. And looks like we've got a message from Chantel.
Yeah, it looks like the kids are watching. I don't know why they're not in bed, but that's okay.
Hi, Daddy. We're watching you, Benny and Max. Awesome. How good's that?
Time for bed, boys.
Daddy's famous.
Daddy says bedtime.
Yeah, so let's talk about the election. I was surprised by the election, but then a lot of people weren't, right? And I want to talk about Labor winning and what that means for property investors, what that means for the economy and what that means. Now, I did a bit of a post, a bit of a rant on Facebook, and I had a lot of people go nuts over it. So I did a bit of a rant because, look, what happens is we're very influenced by America. That's the fact of it. So when Biden was in, all the lefties were in America, a lot of Europe was swinging to the right. Now Trump's in, and Trump's caused a lot of chaos. Whether you love him or not, the guy's caused a lot of chaos. He said, look, we're going to put tariffs in, we're going to take them out, we're putting them back in, and he's doing a lot of stuff. The stock market's been up and down quite a bit, and he's done a lot of stuff. So the next 4 years is going to be quite volatile. And what's happened is Canada have gone to the left with their election, and so has Australia. And I think maybe partly a reaction to, Trump winning in America and things like that. But regardless of what happened, what we need to do is we need to look at, okay, what are we going to do with this? Let me put my nice glasses on. What are we going to do with this? So Labor's won. A lot of people are worried about the economy, worried what's going to happen, and a lot of people have been asking questions. Josephine, could you pull up the questions? I'm going to go through some of the questions after I talk about this, because a lot of people have been asking me, what do I do? Do I invest? Do I wait? Things like that. So Josephine can put them in the chat. I'll read those, but I want to go through what it means, right? So Labor, one of Australia's Labor policy is Big Australia, right? They've got a very aggressive immigration target. So the Liberals, they're all into reducing the amount of immigrants. Labor and the Greens are into getting as many as they can. So Big Australia, if you're a property investor, means big opportunity. Because what's going to happen is every time you get 3 immigrants, you need 1 property to get built. So it's good for you. Who's it bad for? Well, funny enough, Labor, they normally are the ones that represent, you know, the people that are doing it tough, the Aussie battlers. Well, their bigger immigration policy is really going to make the Aussie battlers struggle. So there you go, for one. 2, one thing Labor loves doing is spending money on infrastructure. And they ain't going to stop. We've got a lot of infrastructure. We're spending more money on infrastructure over the next couple of years than we have in the history of Australia. And that's not going to stop. Australia love doing that, right? So what's going to happen? They're going to spend more money on infrastructure. What does that mean? Well, that means, you know, it's bad news for investors, for renters, but brilliant news for investors. Now, but also what's going to happen? This is what happens when actual government spends a lot of money on infrastructure. It increases the cost of construction in housing. Because if you're a builder, now you're competing with government who aren't really fiscally
They've got huge budgets.
That's right. So what they've done is they pay for the tradies, pay a lot of money. So then you compete and you've got to pay more. Therefore, it costs more to build. So the cost of builds is going to go up. And when the cost of builds goes up, 2 things happen. 1, construction companies go broke if they don't know how to quote, which means less supply. 2,
which is what we've seen as well over the last few years.
We've seen that exactly.
Yeah.
2, construction costs go up, so you have to pay more to replace that product. So property prices go up. So that's a cycle of properties going up. So bad for renters, bad for the Aussie battlers, good if you're an investor. Now, Labor, they want to do this rent control thing, right? And every time they mention rent control, it doesn't really go through. I mean, that's one of the stupidest communistic things I can ever think of. You know, the rent control, what they're doing? They want to try to tap out rents.
Yeah. Yeah.
It doesn't make economic sense. The thing is, having an investment property is like a business. And if it doesn't work, you're going to have to sell your property, right? That's the fact of it. And when 2/3 of investors are losing money on property, having rent controls is going to make it even worse. It's already bad as it is because a lot of people don't know what they're doing. So the next thing is green tape. They're going to ramp up environmental protections as always. What does that mean? Well, the green tape is like red tape, but worse. It's environmental stuff. So what that means is a lot harder to actually get DAs approved. It's a lot harder to get land registered, which is going to slow down supply again on top. And Labor and Greens are very good at slowing things down, you know, for lots of reasons.
It's slow already at the moment.
That's going to get worse with Labor. Next 3 years is going to get worse because they're going to get the green tape out and basically they're going to limit new supply even more. The other thing is Labor housing shortage, right? Let's face it. One thing about Labor, one thing they're very bad at doing is supplying houses. They've missed their target every single month since they put it in place. They've got a deficit of 300,000 properties since they've been in. So what have they done in 3 years? Minus 300,000 properties from where we should be.
And it was their own target as well. That
Yeah,
they set
their own target, which they, you know, so what else is going to happen it wouldn't surprise me next 3 years, we're going to be minus another 300,000, if not more. When you put all these things in consideration, it's going to be even worse. So bottom line, there's a bit of a silver lining where Labor is probably not the best for the economy. When it comes to property investors, all their policies are geared around pushing property prices up, which is bad for renters, bad for the Aussie battlers, but good for property investors. So I'm going to go through the Q&A now and just go through what people have been saying. Okay, so these are the questions I've had this week. So Julia said, is the Labor government going to change capital gains tax? They've talked about it, but at the moment, nothing. Rachel said, I've been thinking of investing, but is it smart to start now after the election, or should I wait and see what happens? Look, I put a post on Facebook recently, and I want to just read it out because this is going to explain exactly what it means. This is the post I put up. The most expensive words in property investing is let's wait and see. It's cost many millions. That's no joke. So if you want to hear the most expensive thing in property you could ever do is say, let's wait. So Rachel, don't wait, because if you wait, you're going to miss the boat. Tom,
how many times have we said it in our time? Say, I wish I'd have bought there. I wish I'd have bought this one. I should have bought that.
And you and I, we own a lot of properties between us, and we still wish we bought more.
Yep.
Exactly. Tom, he said, I keep hearing some investors will win from this election, others won't. How will I know where I stand? Well, the investors are going to win, that know what they're doing. They've got the right team around them and know how to group buy. The people that are going to lose is people that don't know what they're doing, and the people that aren't investing, the people that are waiting. Natalie, she said, I'm already a homeowner. Should I be doing something different with all these policy changes? Look, Natalie, what you should do if you're a homeowner, good on you for being a homeowner, well done. What needs to happen is you really need to go from being a homeowner to an investor. That's the best thing you can do. And what I suggest you do is reach out to our team and find out how to become an investor, because an investor is where you're going to get the biggest benefit from what's happening with the politics at the moment. Matt said, a certain area is going to do better now than Labor's in. Should I be looking at different spots to buy? Matt, the fact of it is, when it comes to where to buy, it's all about demand supply. There's 15,000 suburbs. And really, at the end of the day, what we want to do is we want to choose the top 100. And that's what we do. And when you choose the top 100, you're going to be doing well. So you should stick to the top 100. Whether the markets are good or bad, the top 100 is the best way to go. Because, you know, I've used this during COVID. I've used it after the GFC, and it's worked when it's good. It's worked when it's bad. Alyssa, I don't own a property yet. Should I wait until things settle, or is now a good time to lean in and get started? Alyssa, you should get started as soon as possible, because the RBA are looking at dropping rates 3 or 4 times this year, and you want to get in before the next rate drop. That's what I'll do, right? That's definitely what I do, because it's important. And what I was going to say, for the people listening on our public channel, if you want to get ahead of the game, if you want to be a winner instead of a loser from this election, type in #winner, and my team will reach out to you and show you what we do and how we do things for people, and show you what we do, which is great. So what I was going to do is I was going to get Kimberly to share the PowerPoint, and we're going to go through some real live examples with Adam about, I want to talk a little bit about rentals and about money and what we've done. Because I think, you know, who wants to see some real live deals, what we've actually done in the past? I'm going to show this to the public group too. So I think we've redacted the surnames and the actual address, have we?
I believe so. Let's find out. Yeah, we have.
Okay, great. Okay, so let's talk about this and let's have a look and let's go through. We'll start from number one.
Yeah, the main things I'd like to point out is when we're presenting properties, we always give a range of how much it will rent out for. But then by the time these properties are built and tenanted, you'll see here in the far right-hand side, rents achieved versus rental estimate at contract signing. So Kane and Denise bought a property in 21. Yes, that was a while ago. They bought it for 540,000. It's now worth about 900. They were happy to go ahead at that at a rental of 350 to 380. They're now achieving 650 a week. So
Yes, they're achieving 650. Sorry, I didn't want to interrupt you. What I want to say
No.
is when we look at a property, the one thing we look at, there's two things that we look at that are very important. Number one, we look at, is it in the top 100 suburbs? Because we want to make sure this property is going to double every 7 or 10 years.
Mm.
That's the number one thing. And obviously we've got you covered on that. Then the number two thing we look at is the cash flow calculator. And can you afford it? Because if you can't afford the property, it doesn't matter if it's going to double. No point in you buying it because you're going to go broke. And the thing is, a lot of people get picky when it comes to affording and go, well, how much is enough? And I say it doesn't matter how much the cash flow is negative. If you can afford it, you should get it because it's going to pay dividends in the future. Because, and also though, by the time it's ready, your rent's gone up. So this has gone up from 350 to 650. There's an
But
extra 300.
that's a few years away. But look at the next one down, Narangba. That was only about just over 12 months ago that we estimated 530 to 550, and they've achieved 580. So they're getting $30 above what we gave them a range what it could be. So once
Yeah,
again, it's
but
showing.
the thing is, what I want to talk about, let's finish the top one first.
Yep,
A $366,000 profit, right?
can't complain about that.
Yeah, in what period of time was that profit?
21 to now,
Okay, yep, okay,
4
21 to
years.
now. So 4 years.
Or sorry, it's the end of 21, 11th
Yeah, okay.
21.
Yeah, okay. And it's the beginning of 25. So 23
3 years, 3.5.
years. So over $100,000 a year, probably $120,000 a year.
Mm-hmm.
How much deposit would they have paid on that one?
Oh, just 20, 10% of 200, yeah, 20,000, 22,000.
22,000. For $22,000 investing that much and then making $120,000 a year,
Mm.
year after year, where a lot of people don't make $120,000 a year working all year. That's not a bad deal.
But these guys were happy with what I'm trying to get to. They're happy with the 350 to 380 rent when the
Yes,
property was 540. They were happy with that, and then they got that nice surprise at the end that it's gone up
exactly.
$300
Yeah, I love it.
a
I
week.
love it. So let's go Charlene and Paul. Okay, so they got 580 instead.
So that was
And
only
they,
recently. It's only sort of 12 months ago. They bought
yeah,
578, now worth 910, a
and they wait, and
300,000
they
uplift.
made 331,000 in less than a year.
Mm.
Not
And the
bad.
rents we've advertised, not advertised, we anticipated 530 to 550, and they come in at 580. So they've had a win there as well.
Yep, yep. Connor
That's
and
a good
Sarah,
increase, that one.
Connor and Sarah,
What's that, bud?
they bought the next one. Let's go to the
Like
next one.
Capella Bar,
Yep,
that's the same. That's 23. They estimated that. We put the rental estimate in at 650 to 700, and they're getting, I believe, 895.
yep. We've got Claudio here.
Audio's just said here, we told him he's going to get 500. He's getting 560. Where did you buy? You've owned a few, Claudio. Which one's that one in particular, bud?
That one's in Anglevale,
Oh, okay. Anglevale, South Oz.
and it's
Yeah,
gone up 170 grand in 12 months.
Oh, so there you
yeah.
go.
But also, Claudio, I mean, you're positive day one, aren't you?
Well, I'm very positive. Once
Yeah.
the rents go down, my goodness, I'll be making on both properties nearly $1,000 a month.
There you go. Beautiful, beautiful. So it's really good to
just
be positive that quickly in a purchase of a property, especially in the top 100. That's excellent. Well done.
Where's your hat, bud? You've taken your hat off.
Yeah, look, it just pulled my haircut. That's all.
Okay. Oh, I like your haircut. I like your
It's a
haircut.
good haircut, man. It's excellent, excellent. Okay, let's go.
We're up to Luke and Hannah.
Luke and
Parallels.
Hannah.
Okay, we're over in South Oz now. So that's the same. They bought in 22, 540. Now it's worth about 790, 240 uplift. We estimated their rental at 430 to 470. Now it's sitting at, they're getting 650 a week.
Yep.
So once
Right.
again, they've made 200,000 and they're getting an extra, $200 a week rent than what we anticipated on 3 years ago.
Yep. Dave and Louise.
Dave and Louise, same thing, 429. Now we're 780, uplift of 351. We anticipated rent of 430 to 450, and they are getting 670 a week. That's pretty big, that one, isn't it? It's a big
Yeah,
jump.
that's really good. Damien and Katie.
That's 530. Now we're 755, uplift to 215, anticipated 440 to 480, and they're getting 550 a week. So the numbers that would have been worked on would have been that. So we think Charmaine will be able to help me here, but I think you work on the in between the 440 and the 480 on the cash flow calculators.
I think what we do is we look at the worst case scenario and then we look
Worst
at the
case.
best case scenario. We do
Correct.
both.
So
Is
we
that right?
always put the lower amount in first.
Okay, there you go.
And then we also put the higher amount in as a sliding scale so that our members have a bit of an idea of where they sit with that rental.
Well, so okay, so they were happy with 440 a week and they ended up getting 550 a week, so an extra $110 a week, more than what they anticipated, more than what they were happy with back when they signed in 2022.
Yeah,
which is a good outcome.
I'll tell you what's happening next. We're going to go through Q&A quickly. Then we've got Zach, one of our builders, who's going to go through, and we're going to go through examples of how we look at properties and how to compare. Because a lot of people aren't comparing apples to apples. They're comparing apples to lemons. I want to show you what happens when you compare apples to lemons. But I'll tell you what happens when you compare apples to lemons. You buy a lemon, you think it's an apple, you bite into it and it's sour. But with a property, it's not just sour for a bite, it's going to be sour for years to come, maybe for the rest of your life. So you don't want to do that, right? So Stephen De Silva said, if I'm in the process of starting a business, should I hold off on buying a property until the business is running? Depends. What I would do, if I can get a buying capacity now, I would get a property now. Never hold off on buying a property, because I'll tell you why. I'm going to go through this again, because this is very important. There's words of wisdom. And it's most expensive words in property investing is let's wait and see, or let's wait till I do this, or let's wait till I do that. Whenever you use the word wait in property, normally it costs you a lot of money. So you don't want to do that. Also, I want to shout out to Adam Riley. Adam Riley was doing due diligence on the property on Monday night, public holiday, and he was actually in a hospital bed, I think, getting his appendix taken out and actually doing a due diligence and investing in property. Now, what a trooper, hey? Is that amazing?
That's amazing.
Now, someone said top.
Is he okay now? Is Adam
Yeah,
okay?
he's okay. I think he's okay now. I saw him in the group, which is good. Top 100 suburbs, do they change frequently? How does this impact various stages of owning investment property? Good question. So the top 100 changes because the demand supply ratio changes. So what we do is we do a comprehensive list every quarter. And what happens is some suburbs drop out and others drop in. So you invest in the top 100. When that property skyrockets, it's out of the top 100 because the potential's not there as much anymore. But you've already made that uplift and it's still going up, but not as fast as originally. And then we move you into the next top 100 suburb. So like, when you look at the property clock, top 100 is 7 o'clock in the property clock. And does that change? It always changes. That's what it's all about. If it stayed the same, wouldn't make sense, because then that property market will get so expensive that properties there would be 20 million each. Wouldn't work that way. Mm. Yeah, so Claudia said that. Our agent for Burpemere sent us a rent assessment for our area and estimates ours to be $685 a week now. That's Kane. Bo Desert was estimated at 440 to 460 and it's getting 500. Nice work.
Yeah.
Hi, George.
We should have bought one there, George.
Sorry?
We should have bought one in Bo Desert.
Every
time I hear that word.
Yeah, but we had our name down, but we had to give it away, remember? Because that's what we do.
No.
So just so you know, me and Adam, we put our name down every development that we get involved, but we've got the last one. And if someone else wants it, they get it. And that normally happens, but sometimes we get to keep it. And we have to give ours away, the ones on the golf course. Hi, George. Not sure if you've covered this question regarding the re-election of Albanese, but how big of an effect do you see the proposed unrealized gains tax having on investors? The unrealized gains tax is in super, and if you've got over $2 million in super.
Yeah.
So it's very specific. I don't like it. I don't like unrealized gains tax full stop. I think it's a terrible tax, especially considering that super is supposed to be the safest vehicle out there for you, and it's not. That's why I say buy property. How is a land tax calculated within a development like Warrnambool? It's a land component. So there's a very small land component in Warrnambool.
Yeah.
And therefore,
Like
it'll
it's
be
very
very
small
small.
land tax.
Yeah, it'll be very small. So the less land you have, the less land tax you pay. So usually, if you've got a unit or a townhouse, you're paying less. And you've got a house and land, you're paying more. And you've got a farm, you're paying even more.
Mm.
That's the way it works. So look, how long does it take for a property to go to rent? Because it's more than a month since we bought our first investment property and still not getting any renters. Okay, interesting.
Where are they?
We need, they're in Warrnambool. So what I need to do is need to get someone onto that and find out what's going on. What needs to happen? If you haven't rented out in a week, you should get back to
Yeah,
our team.
contact.
Right?
Well, and
That's
there's a
what
rental
happens.
guarantee in Warrnambool anyway, so you should be getting covered.
Yeah, totally. Anyway, so look, this is it for our public group. Remember the public group. If you're watching this and you want to get involved in property, you want to be a winner from the election, type in #winner. My team will reach out to you. Thank you so much for watching. Now we're going to have Zach coming on and we're going to talk about how to compare apples for
Lemons.
lemons. That's it. Okay.
That'll do.
Thank you.